Hello investors and future investors, welcome to the channel. In today's video, I will show you the 3 leaps that I'm using in my portfolio to generate $400 weekly. So if you're new to the channel, thanks for stopping by. On this channel, we help you with option strategies that can give you consistent revenue and everything related to finance and investments. And yes, you too can make money from your living room with options trading, and I'll show you how. All I ask in return is that you give me that early thumbs up by hitting the like button, and also consider subscribing for more ways to win with options. Welcome to Investment Gains. Let's jump right into it. So today's option video is going to be focused on the 3 leaps that I use in my portfolio to generate weekly revenue in addition to my regular options. For those of you new to the channel, LEAPS stands for Long-Term Equity Anticipation Securities, and it's an option strategy that can be used to simulate owning 100 shares of any given stock. I'm not going to go into much detail on LEAPS in this video, but I will, however, link a video to the top that goes into more details. As you know, on this channel, we focus on growing our small accounts, so I will start with the cheapest LEAPS and work my way up to the most costly. So first on the list is Apple, ticker AAPL. Okay, so here we are on Apple, and we're going to jump into the Apple options chain. Now, while we wait for that to load, when buying LEAPS, you always want to make sure that it says buy and call and choose your expiration date way out, preferably 6 months or more. So I'm going to show you a LEAP that I already own in my portfolio. So we're going to go to January 2022. To make the LEAPS more effective, you're going to need to choose the strike price below the current share price. So the LEAPS that I currently bought is at $120 strike price. Now, it shows here that the LEAPS costs 32.53, which is $3,255. But at the time of purchase, it costs half that amount. So let's go ahead and go into it. We're going to hit continue. We're going to choose the amount of contracts we want, which is 1. And there you have it. So, like I said, in order for you to get into LEAPS options trading, you're going to need to buy a LEAPS. This is one of those pay to play options, meaning you have to buy first and then you could use to generate weekly revenue. So for you to get into the Apple LEAPS at the $120 strike price, this one is going to cost you $3,265. So you're asking yourself, why did I choose 120 strike price when I could have chosen any one of these above it or any of those below? Now to answer that, I'm going to go into the Apple Greeks. So here we are on the Apple Greeks. So my personal preference, whenever I'm trying to acquire a LEAPS, I look at the volume in comparison to the open interest. The second thing I look for, which is mostly very important to me, is the delta. I always try to obtain LEAPS with a delta of 0.75 or higher. For this Apple LEAPS, it's trading at almost 88% delta, meaning every time Apple goes up by $1, your option is going to go up by $88, and vice versa. If it goes down by $1, your option are going to go down by $88. Now, let's go into our second stock. Our second leap for today is going to be AMD, ticker AMD. So we're going to do the same like we did for Apple. We're going to go into the AMD options chain. So let's go into trade AMD options. We got to make sure once again it says buy and call, and we're going to choose the strike date way out. And for purposes of this video, we're going to use January 21st, 2022 once again. Okay, now once again, we're going to choose our strike price below the current share price. And as you can see, I already have one right here at the $95 strike price. And the cost of that is 19.2. So we're going to go into the third stock now, which is going to be NVIDIA, ticker NVDA. Okay, so here we are on the NVIDIA options chain, and we're going to choose our expiration date way out. Let's do January 21st, 2022, like the previous 2. Now we're going to choose the strike price. As you can see, I have one for the strike price of 180, and for that, it's going to cost me $3,043 or $30.43. As you know, each option contract is multiplied by 100. So now we have these 3 leaps. Now I'm going to go ahead and show you how I use them to generate $400 weekly. So we're already on NVIDIA, so we're going to use that one. Firstly, owning a LEAPS in your portfolio is just like owning 100 shares. It's a close simulation of owning 100 shares, That being said, Robinhood allows you to use these LEAPS option in order to sell covered calls. Now, owning a LEAPS option and selling covered calls against it is what's called the PMCC, or poor man's covered call, and I will link a video to that up here as well. So now we're going to go ahead and we're going to sell covered calls. Now, when selling covered calls, it's advisable that you choose the date closest to you. The reason for that is that you're trying to get as little time as possible for your buyer of these options. So now we're selling our covered calls against our LEAPS. We're going to choose our strike price above our current share price. So here you go. I already have one here. So that's going to be 205 strike price. And for that, I'm going to receive $313 or $3.13. Now, when selling covered calls against my LEAPS, I want a chance of profitability of 75% or higher. The reason for that is that I'm trying my best not to get assigned on my LEAPS. So with 75% chance, you receive $310. Now, if you want to be more risky, you could always choose a strike price below the 205, which is going to give you a lot more premium. Also, in reverse to that, if you want to be a bit more safe, then you could also choose strike prices above 205, and that's going to give you a little less premium. So we're going to stick with the 205. We're going to receive 313. Now we're going to go into Apple once again, ticker AAPL. We're now going to sell a covered call on Apple. So trade Apple options, and our expiration date is going to be August 20th, which is the closest expiration to us. Now we're going to choose the strike price of 152.5, and the reason for that once again is because it represents a 75% chance of profitability or higher. So that's going to pay us $77 in premium. So now we have 77 plus 300, we are 377. So let's go into our final stock right now, which is going to be AMD. So once again, you're going to go to trade AMD options, and we're going to be selling a covered call against our LEAPS in our portfolio. So sell and call, choose your correct expiration date, and now we're going to choose the strike price above the current share price. And remember, we're also looking for chance of profitability of 75% or higher. Now with AMD I think is extremely volatile right now, so I will go for a bit more safety net. I'm going to choose the 112 strike price. Now for the 112 strike price, we're going to receive $95. So now we're going to add the $95 to our total, and that's going to give us $485. So there you have it. That is how I generate $400 weekly with only 3 LEAPS in my portfolio. Now, there are 2 tricks when using LEAPS options to generate revenue. The first trick is to not be greedy. The second one is don't lose your LEAPS. If you lose your LEAPS, then obviously you would not be able to sell covered calls to continue generating revenue. The first part where I said don't be greedy means don't choose your strike price too close to the share price where the chance of you being assigned is inevitable, and then you lose your LEAPS. Once that happens, then you're no longer going to be able to generate weekly revenue. Now, we have lots of strategies like this on this channel. So if you want to join the weekly income team, like and subscribe right now. Also, hit the notification bell below to get an alert whenever I post a video. But most importantly, if there's someone out there you think that can benefit from this video, feel free to share with as many as you can. Thanks for watching, and remember, always take your investment gains.